So, my fellow Nigerians, once again, welcome to January 1, 2026, a day that marks the formal commencement of Nigeria's new Tax Reform Act. A reform the government says is designed to modernize tax administration, improve equity, and strengthen fiscal sustainability. Well, in principle, tax reform is both necessary and desirable, especially in an economy facing weak revenues, rising debts, and, of course, widening inequality. However, this reform arrives amid deep controversy. There are allegations of flawed legislative processes, conflicting versions of the law, and questionable enforcement provisions, which have triggered widespread skepticism. So, what should have been a confidence-building reform now faces a credibility crisis, raising questions about legality, accountability, economic impact, and, of course, public trust. So, we are going to be talking to Kenneth Erikume, who's partner at tax at PwC Nigeria, and of course, will be helping us understand a lot of the questions that Nigerians are asking right now as regards the new tax laws that takes effect today. Thank you so much, Kenneth, for coming around.
Thank you, and Happy New Year.
Same to you. So, today being January 1, the new tax reforms will take effect. Now, given the controversy, are you genuinely confident that these reforms will have a positive impact on Nigerians, on the businesses, and of course, the broader economy?
Yes, indeed. I believe that the tax reforms would have a very positive impact for Nigerians and the economy. So there are a few things that have significantly improved in relation to tax efficiency under the Nigerian Tax Act. One of them is, consolidation of some earmarked taxes at the federal level. But there's a second phase that's currently happening at the state level, where the subnationals have taken a consolidated and harmonized taxes and levies act or law for submission to the state houses of assembly, which would then consolidate many of the states' legislation into, I think, about 9. But even at the, federal level, there are also some benefits to low-income earners in relation to their personal income taxes. So if you're earning 800,000 naira and below, that's completely exempted. And then we have a progressive rate that only begins to become more burdensome than 2025 when you cross the 25 million mark. Apart from that, there is also going to be a significant improvement in margins from companies that many people are not talking about, due to the ability for businesses to be able to claim the taxes on their expenses. So the VAT on expenses in 2025 was not recoverable. Now it's going to be recoverable. And if you do not have any VAT you're charging to your customers, then you get a refund from the government. I think, the controversy has largely been, in my view, due to the fact that Nigerians haven't read it completely. One, of course, there are segments of, industries or sectors that may be adversely impacted, but not many. For example, the private equity space, essentially with the increase in the taxes on capital gains, and a few things here and there. But I think largely what people seem to people under apprehension is the level of transparency that the tax laws are seeking to achieve in terms of visibility to bank transactions and financial institution transactions. But, that shouldn't worry anybody who was paying their fair share of taxes in the first place. So, but I think the issue is that the tax culture is not exactly there, because in 2025 our tax rates were high, but the government was only able to do 10% tax to GDP ratio. It shows you that there's a huge non-compliance, and then there's that lack of tax tax culture. And when that is being pushed to change, people would obviously be a bit concerned.
Okay.
And I've heard a few things around different scenarios. I think people just need to. Um, it's positive because people are now engaging on issues relating to tax revenue, unlike before. But some of it may not exactly be right in terms of the conclusions people are reaching.
Okay, well, you've actually given lofty remarks as regards these new tax reforms coming into play. But then a lot of Nigerians are still bothered about the legality of these four tax bills. I mean, there are allegations of manipulation and discrepancies between what was passed and what was gazetted. And, there are equally doubts on the credibility of the lawmaking process that gave birth to the legitimization of these tax laws. So does that not actually bother you in terms of the legitimacy deficit, that cloud that we see, gathering around these particular tax laws in place?
Yeah, I get the allegations flying around obviously are worrisome, but it is something that I don't think I personally can resolve. It is something that the the legislative arm of government and the executive arm of government have to work together to ensure that things are smoothing and the right version is what is being published. So to that extent, of course, everyone would be worried because there have been multiple versions, multiple things that people have put in on websites and on the internet that could be wrong, and that makes it a bit difficult, and you begin to then question the integrity in the process. But what the government has done in recent times is to come out and say, well, things are proceeding as usual. Do not forget that the Nigeria Revenue Service Establishment Act and the Joint Revenue Board Establishment Act have already been in effect since 1st of July 2025. The Nigeria Tax Act and the Nigeria Tax Administration Act are those that needs to kick in from 1st of January. So they've said there'll be a re-gazetting, which is essentially going to be a publishing of the version that the Harmonization Committee of the National Assembly actually passed and submitted to the clerk, who then submitted it to the president for assent. So to that extent, yeah, while it's been a bit topsy-turvy, in terms of the process, I think in the end, with all the things that are happening at the National Assembly and with the executives, the right version will then be republished and everyone will be able to see it in the official gazette.
So Kenneth, that's where the issue is, because we are looking at tax legality, tax accountability, and the protection of taxpayers. But reading your body language, it seems as though even you are not too confident about how legitimate these new tax laws are in terms of the discrepancies, the alterations that we've heard in the gazetted version and the other version. So at this particular point where we are not sure of what would be implemented, shouldn't it be suspended rather than being gazetted?
You need to really understand that it's even impossible for it to be suspended, right? The legislative process, there's a process. The gazetting is a publishing. It's not really where the law takes effect. The law takes effect immediately the president signs. So once the process at the National Assembly has been fulfilled, which means there were stakeholder consultations,
Hello, Kenneth.
then there was sorry, can you still hear me?
Okay,
and ultimately,
yes, go ahead.
And ultimately, if it was consolidated and a harmonized version was submitted and passed and then submitted to the president for assent. Immediately that happened, it is law and it is binding. So there's nothing anybody can do with regards to that process. So the legitimacy of the law cannot be called into question because the process has happened. What you can really question is the version that that was passed. And apologies, the call keeps coming in.
Yeah.
So and that is what the publishing, the regazetting is expected to address.
Okay.
Hello, can you still hear me?
Yes, I can. I'm just guessing there's a glitch from your end due to the call coming in. Are you good now?
Yes, I'm good now.
Oh, okay. So part of the things you've mentioned are actually the concerns of Nigerians as regards what actually went through a legislative process and what was eventually passed into law, which is different from the version from what it's been made available for public consumptions. Of course, I want to believe you would have gone through the documents that actually gives room for the understanding of these particular tax laws in terms of alterations, some certain clauses being included. And that is where the challenge is for Nigerians. So if the National Assembly had passed a particular set of documents that contains bills as regards to law, and eventually what would be implemented and come into full effect carries some other aspects that were not originally part of what the lawmakers had legislated upon and approved, that should actually be a cause of concern when it comes to implementation, because it carries issues as regards arrests, some sort of dabbling into collecting some certain amounts of money for defaulters and all whatnots. So how are we sure that what is being passed is what would eventually come into full effect now that is actually being implemented? That's where the problem is.
But there's I mean, so I hear you, but the problem that you're articulating is not a significant problem. I think first of all, whether there are alterations, I think the National Assembly was supposed to look at that.
Yeah.
So that's an allegation of whether there were alterations. Do not forget that this is a human and manual process, and people are involved in consolidating. These, so one of the law is like 400 pages, right? If someone is taking the version from the House of Representatives, and then another version is taking the version from the Senate, and trying to consolidate with a manual process, then there could be mistakes. So we can't reach the conclusion that there were alterations, if you see what I mean. Now, in the end, whether, I think that process needs to be improved going forward, because in this day and age with technology, the different versions and everything can be online and available to the two, chambers, and all of that process with the submission to the president and gazetting can all be done electronically. There are governments that have invested heavily into that process. But until that process is automated and it involves human intervention, then you can always have some of these happen. Now, the reason why this has become so prominent is it's not like it something like this hasn't happened before. It's just that because of the the imminence of the law and and people trying to understand and appreciate what's going on with the law, people are a bit more concerned with this one than when it may have happened in the past. Now, please understand that in the current laws, there are penalties. There are penalties. There's the ability of governments to convict and, criminal prosecution and people going to jail and all of that. So many of the provisions around penalties are not new. The new introductions are largely in relation to things around transparency. Without proper data and transparency, government cannot move the tax to GDP ratio beyond that 10%, right? And an ecosystem that does not ensure, transparency and use of data would make the people who are compliant disadvantaged. So you need to ensure that the full system is a level playing field for everybody with proper access to data such that evasion is largely minimized. Now, if I was evading taxes in 2025, of course I'll be worried if now my bank account and my information will now be, subject to scrutiny by the tax authorities. And I think that that's really the question. But the other issue for me is the utilization of the tax revenue as well, because why there's a gap in the tax culture, and that you need to improve. There are also questions from citizens around the judicious and effective use of the tax revenue for the benefit of citizens. And I think that is where the second concern comes from. Now, if you address those two things, right, upping the tax culture so that everybody pays what they're supposed to pay. Do not forget the saying, give unto Caesar the things that are for Caesar. If everybody drops their penny, right, then the tax system is fairer. The second thing is government has to use the funds effectively for infrastructure, for social good, and for the benefit of the citizens. Now, when you see those two things happening in most jurisdictions where this has happened, the quality of life and the level of governance improves because the citizens begin to hold the government accountable, right? And I must say that a lot has to be done apart from these tax reforms to look at fiscal discipline, as well as judicious use of the tax revenue as well.
Well, of course, we know that the government has come out to say that these new tax laws will actually strengthen fiscal responsibility, improve on value across the chain when it comes to businesses and commerce in the country, while also boosting equity and growth. But then we are still going to look more into this, Kenneth. So I'd like you to stay with us, most especially as regards what Nigerians are doing right now, because you talked about tax evasion, which is also another part of this conversation that we need to look into. So Kenneth, just stay with me for a while. When we go on a break and return, we'll look at how to make this particular new tax system wholesome for Nigeria and Nigerians. So Nigeria's new Tax Reform Act comes into full effect. It is fully operational as of today, and that actually ushers in Nigeria's new tax administration, where a new set of rules come into play to actually make the system more responsive, more responsible, more accountable, not only to the Nigerian government, but of course to Nigeria's economy in terms of revenue generation and distribution. We have been talking to Kenneth Erikume, who is a partner at tax PwC Nigeria, and we'll be looking at how these would affect Nigerians, businesses, and of course the overall economy. Now, Kenneth, a while ago you were talking about the possibility of people who actually continue to evade tax, but then we see a system coming into play who would actually that will actually address those issues. Now, we are looking at Nigerians that are already adjusting behavioral patterns to this new tax administration, such as tagging transfers as gifts or support to avoid having to pay excesses in taxes. But then do you think that actually protects them from multiple taxation, even as they try as much as possible to evade tax in this new tax system?
To be honest, I'm not so sure they can. Sorry about that. I'm not so sure that you can evade tax just by, so if something is actually a business transaction, you then describe it as a gift, and then you believe that the government will not know, right? Now, what's going to happen is that the returns that will be submitted by the banks would have information both from the sender and the person receiving the funds, right? So if I'm transferring money for the acquisition of property from my side, governments would have, that information that I'm paying for a property. Now, if you on the other side want to call it a gift, I'm not so sure how that would work, right? So the tagging of transactions, when people put the descriptions, that is just best practice and something that someone who wants to keep their affairs properly and have a level of accountability, that's what they will do normally for each transaction, right? They pay for an Uber, they'll call it Uber and transportation. They transfer money to someone as a gift, they call it a gift. Now, that is something that, for example, I personally do, even without the tax law. But over and above that, right, government will not be relying on just those descriptions in the returns. They'll be looking at how that transaction plugs in on the other side of the transaction and be looking at, how transactions have happened with, several other data points. So if, for example, if you pay for a car, right, and the person who received the car calls it a gift, you would have to register the vehicle. When you register the vehicle, who did you buy it from? And all of those things will be uncovered. So I would advise anybody who's previously not been accounting fully for their income to begin to look at how they account for it fully and fully comply. Because that's essentially what government needs to crack to ensure that there is fairness in the system. Apart from, the progressive rate of tax to ensure that, the low income earners are protected, exempting essential goods and services and things like that. Government needs a bit more visibility. You see people, declaring, minimal taxes with the tax authority, but, living a lavish lifestyle. It could have been from an inheritance. It could be from a gift. But if it is from a business transaction, then it should be taxed just like everybody's paying their fair share of taxes.
Interesting. Well, many fear, Kenneth, that the reforms could worsen inflation and living costs if businesses pass higher tax burdens to the consumers. I mean, a business owner, an entrepreneur would want to protect his profits, so to speak. So how valid are these other concerns?
That's on the assumption that if you make the assumption that the tax laws increase the tax rates, but they don't largely. And I've already at the introduction mentioned the instances where you have, the adverse rates. But in terms of inflation, the tax laws would improve inflation. Why? Because the margins of businesses, compliant businesses, right? The margins of compliant businesses would improve because the costs, the VAT on the cost of businesses will now be recoverable. In previous law, when you pay VAT for purchase of a motor vehicle as a company, that VAT is expensed. But now what government is saying is that when you pay that VAT for the purchase of that vehicle, you can recover the VAT against the VAT you're charging your customers. So the costs of every business that has been compliant should improve significantly, maximum by 7.5% of their costs, but it could be lower, right? Depending on the type of business and so on and so forth. So from an inflationary perspective, there's going to be large improvement in the margins of compliant businesses. Now, non-compliant businesses would obviously find a way to maintain their margins. which may mean that they need to then begin to charge their customers a bit more. But that will be counterbalanced by the large effect of the ability to claim, input VAT, in my view. So if you ask me to be a predicting man, I would say that from an inflationary perspective, there should be a significant counterbalancing, depending on how government implements the claim of input VAT. Some estimates have said that the VAT revenue of government, if you keep everything constant, like in 2025, might reduce by as much as 40%, 50%, right? So government may lose revenue in order to ease the margins of businesses. So that's my prediction. If I were going to predict.
Of course, I understand. So if we look at payee, we look at VAT, we look at capital gains tax and every other tax, one would expect that this large pool would actually bring in revenue, depending on the streamlining of it, bring in revenue for governments. But then key in everything that you've said, Kenneth, is the utilization of these funds, how it will translate into development in Nigeria, infrastructure, businesses, the commercial, the corridors and everything, and people can see the benefits of the taxes that are being paid. I'm sure Nigerians will not have issues when they see that these funds are channeled into the right areas and the empirical evidence is to prove that their obligations are being used for something transformational for the country. We hope that we'll get to that point. Kenneth Erikume, partner tax, PwC Nigeria, thank you so much for shedding more light on these conversations. It was nice talking to you.